All right. Mic check. I think we're good to go. And just make sure the audio settings. All right, I think the settings are what they need to be, so let's get into it. Let's pull up a fresh chart. Hopefully I have one. Let's use Bitfinex, Coinbase. Do y'all know it has like the third highest trading volume? I'm trying to figure out where all the volume is. Highest BTC trading volume exchanges. I probably worded that horribly. Oh, I guess CoinMarketCap would tell you. Look at Bitcoin markets. Let's see where most of the volume is coming from. Clearly MEX. I wonder what that double asterisk means. Volume excluded. All right, whatever. It's actually a lot of BTUSDT on Binance, Bitfinex, Coinbase Pro's all the way down here actually. Let's see if we can get Binance and OKEX. So I want Bitfinex. I guess OKEX doesn't show up. Binance and Coinbase. We'll just take the average of those. All right. Let's see. We got our volume. All right. So this is where we're at. I don't think I made a video since the 4th, so it's been about 4 days. But this is nothing new. We were bearish here, for sure. So I guess what's important to note, we should talk about where certain levels are. So here, you see the weekly time frame held up right here, and then we cut below it, and we retested a couple times here, found brief resistance, and then exploded up. So we'll call this a weekly SR level. And you can also call this a weekly SR level. Had a wick come all the way down here. You had a couple touches right here. Solid longs. Actually, looking back on it, seeing this would have been a great long entry. Tweezer bottoms, right? Where the second candle failed to clear the wick of the first one, and they both traded below a previous level of support, but they ended up closing above it. What's good, blockchain? What are other levels that are important? I'm trying to think of just straight horizontals, because there are a couple blocks that we want to mark off. I guess the only other blocks that would be important to note are the blocks that just got broken, right? So the only other levels you might want to point out. I'll put this weekly SR level because I think this is important. This was the area that we broke. It was support, right? Sometimes you just really got to pay attention. So here we have this wick as support, and then we actually traded back into it, but finished with that upper wick, and you see this served as resistance. And this happened like months ago, right? And so to be able to have the hindsight to look back and then now look forward and realizing, oh man, this is a clear level, of price interaction. That's a good skill to have. So I'll mark that level out. As far as blocks are concerned, the weekly has not finished printing. It is only Wednesday. Wednesday's daily candle finishes in about 2 hours. But I will mark this off just because, and I encourage you all to mark this level off too. Where we close in relation to this block will be important. And I'm also going to put a very thin line right there and say liquidity. Oh my god, I can't spell. Liquidity here. Put down the bottom, put it to the left. Just so you all know, like, if price trades below this wick, but then closes above it, that might look like a good little stop run for some bullish action. But we're not even worried about that right now. Right now, we're looking at this block, right? This was the last little pullback bears had before price exploded up. So I want to point this out because this is a 5% down move that was followed by, and if we're just taking the closes of the candles, a 29.5, almost 30% up move, right? So clearly some demand was found here, and we exploded up. That being said, we have currently cut through it. So a weekly close above here might be very interesting, but I highly doubt we get that just because, I mean, this was a weekly bearish engulfing. If you don't really want to count the wick, it engulfed the body of the candle, and then, damn, we really just erased 2 weeks of trading very, very quickly. So I want you all to pay attention to this block. That's important. So cool. Now let us zoom in. Again, we're looking for possible stop run under here because we clearly didn't take out those stops before we pumped. So the market might be coming back to get them. I don't see how we pump without taking out these stops. So if you're short, which I'm short from here. I don't know how I missed all of this, but caught it here. I'm short from this wick if you see it. I wouldn't close my short until we approach this level. I just really don't see how we bounce without taking out those stops that are probably under this this area right here. Daily candles. So this is the weekly. I'm gonna overlap them. I don't usually do this, but just so y'all can see what we're talking about. This was the last down move. Again, just taking the bodies of the candles before the massive pump. And you can see this is validated, and this is what I really like to see. You see explosive price movement as we exit the demand zone. So this makes me very confident in this type of block because, okay, we had this down move, and you can see as we left it, it was no joke, right? We weren't bullshitting. So on the daily time frame, it'll be interesting to see where we go in relation to this block, right? Because we've already wicked all the way through it. So now the question is, do we close above it on the daily time frame in 2 hours? Very important. Top of daily order block. And if you're confused on like how I'm choosing these levels, literally like just the last down move before price exploded up, and then also making sure that price exploded up when it left, right? That's the formula I'm using. Pretty much if you're familiar with Wyckoff, and we bring this up all the time, I'm basically looking at LPSs. I hope this clears up soon. Yeah. So I'm basically looking at LPSs for the most part, last points of support. Those are areas that you can expect to be supported again, um, like here. So when I'm looking at this, I say this is essentially the last point of support before price took off. And so you expect when price returns to this that it acts again as an area of support because it's the most recent area of support. So yes, it'll be very interesting to see in the next about hour and 53 minutes if we close above this level. Make this blue. That being said, the next levels of support clearly are this weekly resistance on the daily time frame. I guess you have this block right here. Well, this is straight because you see we actually wicked in here before, caught some demand and then pumped. And you actually see, if you really look close, see if we can get down to like the 5 minute. We actually wicked in here, grabbed demand, and immediately popped up again. So, will be interesting to see if this serves as support again. So this will be a good area of support. If you were looking to go long, again, I'd wait for a possible trade below here and then close above. But if for some reason you just really wanted to go long, I'd fib it out personally just because sometimes it's hard to get a number. I'd probably go right here on the 88.6 fib. Probably enter here, or even just enter on the weekly. Maybe ladder your bids or orders here. I still haven't figured out the difference between bids and asks. Like I know one's for buying, one's for selling, but it's like when you're a kid, you just get left and right mixed up. It's like I know there's a difference, I just forget. And then my stop, man, see this is why I wouldn't like to go long, because your stop has to be under this wick somehow, right? Because this is an area of market structure. But if you do that, then you start getting like, I don't know, you just don't know how vicious this stop run might be. So I don't know. I'm not even gonna recommend going long here. I'm just not. At least until bulls prove that they can push up a little bit. Because if you look at this, especially if you look at the Heiken Ashi candles on the daily, I mean, it's been a very easy trade to go short. Could have went short any one of these days. So yes. And naturally, if we close below levels that I'm marking out, then we're gonna look at them as resistance. So I'm marking out areas of support, but if we don't make it, then it's resistance. So I expect this level 6.8 to be resistance again. This block, I expect us, if we close below it, to be very hard to come up against, and we'll probably face the real resistance around this cluster. If we close below this block, I expect this to be resistance, you know, so on and so forth. Oops, let's get rid of that. What else is important? I guess reiterate if you're not used to the channel or used to me. Oh shit, this combination of exchanges right here. This is what, yeah, this doesn't have a lot of history on it, this chart. What's a good color? Just pick one. It's light blue. Looking for here, this is my target. Y'all know this is my target. I talk about it every time. For the market in general. Not saying we won't go below it, but I'm expecting at least a touch of here. That's why I keep telling people the bottom is sub 5K. And I mean, I could be totally off base. We could never reach this line ever again. But it was the last monthly block that was a down candle before the run up to 20K. And so if we, are going to retrace, it makes sense. This is again, this idea of the last point of support. So that's what I'm looking at. And that would be all the way down here. That would be about another 25, 30% drop from current price, about $2,000, give or take 1,500. I'm really trying to figure out what is important to show you all. SR levels. That's why my videos can be kind of boring, because I mean it's very straightforward. Horizontal lines, right? And then looking at volume. So let's get rid of this real quick, just because we're trending so hard. I mean, there's no need to look for any type of divergence here. Maybe on the 3-day, if we close. Nah, not even on the 3-day. Yeah, there's no point in looking for a div right now. Let's see. Volume, very strong. You can see this looks like it's going to be stopping volume of some sort. Usually it is when it gets around this level. And so I expect a retrace upwards. Where to? I have no idea. I think a 6.8 makes sense, but who knows? We might want to take this whole down move, and if you do that, yeah, this maybe take about 23.6. It's a nice fib level, or 25% of the move. Retrace up to this weekly SR level, and then keep dumping. But this looks like stopping volume. Very solid, very commanding. It also depends on how long this wick is going to end up being once the daily closes. If it's not that long, I don't know. We could see another quick move down. Basically, I'm looking for two things. If this wick closes low, if we close low, if we close near the low, essentially I'm looking at a situation where we're going to continue dumping, but the next down leg is going to have less volume, creating a bullish volume div, and will pop up. Or this wick is going to end up being really long, and then we end up retracing up to this level. Either way, we're going to retrace up to this level, unless we just go sideways for a very long time. It just depends on if the bulls make another down, or bears, excuse me, make another down effort, or if we cool off by going sideways. Maybe we flag and retrace up a little bit and then dump. So it just depends. But this is kind of like a situation that you're looking at where you have, a very strong down daily candle, high volume, cool off, and then bears make another effort on much lesser volume, and then we pop up. Kind of what I'm looking at. Or looking at a situation like, I'm trying to find a good one. This was during a bull market, so I don't want to use it. But I guess like these candles were extreme, but essentially high volume, but you have these long lower wicks. We don't really look like that now, but I'm saying if we do close like that, then yes, we're expecting a retrace if we get long lower wicks, right? That's indicative of demand coming in. All right. Hopefully you all have these lows marked out. I'm about to delete everything. So another thing I want to show you all, two things. Well, I guess a couple things. We can look at the weekly bands. Bottom band's at 5.6 right now, which would be a clear of this low. That would be interesting to see if we get a touch of the bottom band and then a retrace up. Regardless, if you're ever confused about the trend, the B band median on high time frames will tell you the trend for that time frame. So in this case, the B band median slope is going down. Trend is clearly down. It really doesn't get simpler than that. Bear market. And until it flattens out, then we can talk about, bull market, or it curves up. Right now it's going down. Daily bands. Here's another good example. The daily time frame. BBA median was going down. Trend was down. Then it went sideways for a good amount of time. It went sideways actually for about 2 weeks. And then it sloped up. And now it's sloping down, right? It's very clear. And if you're that type of trader, if you can swing trade, you may not be the most profitable, but you definitely won't lose money like that, right? If you're holding from days to weeks, man, this is a cheat code. Like, you literally just low leverage, don't really care about, catching knives. As soon as you just see shit pop up, you're like, oh, these are bullish candles. Go long here, boom. And then, you start to see shit get bad. Maybe once we break support, because when you're bullish, you shouldn't be breaking support. You should be breaking resistances. So maybe on the first support break, boom. And like, this is a very poorly managed trade. Like, there's so much more opportunity here, but that's still money, right? The point is, are you making money or are you losing money? People spend so much time trying to be knife catchers and be the most profitable on a given trade, which is great, but like, you want to be profitable on like all your trades, right? And if you have to sacrifice efficiency for a wider range of profitability, that makes sense to me. There's no point in having the most efficient one trade, but you're net negative because all your other trades are shitty. It makes more sense to have like a whole bunch of average trades where I'm profiting more often than not. And that's a very wide statement because you can be very profitable and lose most of your trades using good risk management. You can be right only 30% of the time and still make money. That's the power of stop losses and good entries, but that's another topic. But yeah, B-band median down. Wanted to show you the bottom bands, 5.6. Cool. Next thing, EMAs 1226. I like these. Resistance. So this is actually interesting. Since the bear market started, these have been signs of being overbought. Closes above the 12 and 26 EMAs have been the local top. And great short entries. And I promise you, this is the last time we're going to see it because that's just how it happens. And it's so fucking annoying. Whenever you finally like notice a trend, it's like, it's probably not going to happen anymore. But yes, every time we've had a weekly close above the, what's this called? The 12 and 26 EMAs, pink is 12, red is 26. Whenever we close above them, immediate dump. They mark the local top every time with like the most efficiency ever. It's ridiculous. But the point is, high time frame weekly, they cross bearish, and they're definitely going down now. But I do want to point out the 200 weekly EMA served as support here, and now we're approaching it again. It's currently at 5.9. Now, if we cut through it and treat it as resistance, man, that's going to be crazy because what that means, I'll put this in big red. If we break that 200 weekly EMA, pretty much all of this that was support here, and here, man, that it's over with. It's over with. It's done. It's gonna flip into resistance, the ultimate kill zone, right? This is the what do you call it? The descending triangle nobody wants to look at, right? It's not good. Repeated hits of support from the same side. It's weakening every time. There's less demand here every time we do this shit. So yeah, if we break the 200 weekly EMA and that turns into resistance, oh my god. I don't even know where the 100 weekly EMA is. We broke it. Look, it was support, kind of low resistance, reach for it, didn't really touch it. Boom, broke it, support. You see this, a wick, right? It held it up at the end of this week. Started to retrace, got up to this wick, couldn't do it, broke it. So the 100 weekly EMA has already turned into resistance. The 200, if that goes, man, this is bad. for bulls. I don't care. Market will do its thing. Daily, clearly bearish, bear cross below the 200 daily EMA. Actually served as support beautifully right here. Couldn't hold it. And actually you can see the time spent above the 200 daily EMA is less and less each time. So here we closed above it. We were up there for about 22 days. Here we're up there for about 18 days. Here we're up there for about 8 days, 7 days, about a week. So I mean, that's important. Pay attention, right? It shows that bulls really aren't sustaining. They're making these large, quick, aggressive moves, but they're not like good trends, right? You barely really see any retraces in these up moves. They just kind of go up. They don't like pull back. Whereas in the bear moves, it's a very healthy down move where down, you pull back, down, pull back, down, pull back. You know what I mean? So now we're waiting on the pullback here, which we probably think will be around here. It will be interesting to see what the daily ones are once we start pulling back. 4 hour, I've been using this as my guide. I'd actually probably use this to place my stops too. Maybe more so the guppy because I want to make sure I'm holding this position correctly. But yeah, 4 hour 12.26 has been fucking perfect. Pull back here, popped off, nested inside perfectly, popped off, support held, broke it, sign of weakness, disrespect of the 12.26 EMAs. We just really fuddled inside of there. Dump, short entry here, dump, short entry here, dump, short entry here and here, dump. And so now it'll be interesting to see where the next short entry is. I didn't notice this, but just now looking, clear bearish order block right there. So it'll be interesting to see if we retrace into this block, bearish block, as the EMAs come down. About a 38.2 retracement, very solid line and level. So if you weren't short and you're trying to get short, I'd maybe look at this block. And I'd probably layer some bids here, with the last one being there. And I would short, I'd short this with a stop above wherever the 26 EMA is at the time. So by the time it comes down here, hopefully it's less than 3% away, and you can be short. Cool. And the last thing to show is the guppy. Now the weekly guppy actually has, I mean, it's been great this whole time. We've gotten no action. So let's move in. But all that to say is when they do decompress, it should be a very vicious move. 3 day, or the daily, excuse me. The daily EMAs, the slow ones, have not even expanded bearish yet. And I think that's so important considering how far we dump, right? So the fast EMAs will of course expand first, and they'll give the initial direction of the trend. And then the slow EMAs will very much confirm that trend. And so you see here, the fast EMAs turn. Well, I guess they didn't really. Trying to think of a good example. This one's really better just because the fast EMAs never actually got to turn bullish here. But here, fast EMAs turn bullish, and then you have about 1, 2, 3, 4, about 4 days later, then the slow EMAs turn bearish. I think I said bullish, I meant bearish. And once the slow EMAs start to decompress, then you see the trend really show itself, right? We already knew this is already a sign of weakness and a retest of support, now resistance. But now you really get a solid uh, show of the trend. Again, then the slow EMAs compress, and then they decompress, or the fast ones, excuse me. Meanwhile, the slow ones are continuously staying bearish. And then here, cool, end of trend. They never turn bullish. So now we're probably about to see the fast EMAs turn bearish again. And the slow EMAs have not even decompressed yet. Like, that's so crazy. So when they do decompress and establish the downtrend, man, the daily EMAs, let's see, they go about, the slow ones, they stay slow for at least a month and a half, or 2 months. And they haven't even turned yet. So if this happens again, let's just short it, or not short it, but like sell it short. I guess you really can't say that, but let's underestimate it, and let's say that it only stays bearish for 30 days. Just a month. Whenever they do turn bearish, and I don't even know when they're going to turn bearish, but let's say they turn bearish soon because it's been pretty bad. Let's give it like 2 days, and they turn bearish. Man, we're talking about 31 days or more starting from now, or 32 from now, of just being bearish. And it's like, damn, I think that's really important. But yeah, 4-hour EMAs. This is good for like stop management. So you can like put one stop below the slow EMAs, so you don't get or I guess above, since we're going down, so you don't get taken out on quick moves. And then maybe like another stop above the fast EMAs, so you make sure that you're out the position if the trend changes on you. And so if you did that here, let's say you missed this whole move, but then you got short around here, and then you had a stop here and a stop here, you would have been safe. Here, your slow stop would have been taken out, and then you might have got fucked up here. Depends how, or your fast stop, excuse me. You might have got fucked up here. Depends how much to heart you were taking. Put your stop right above the slow EMAs. But then ideally you can catch this, and then you'll definitely get stopped out here. So for a position like this, you know, maybe you have a stop above here because this was support. Actually, let me just do this with lines because it's annoying me. Let's see. That was the lowest close-ish. And then look for the wick. Maybe here. So maybe you have a stop above here, which would be above 6.9. Oops. And then maybe you have a stop above here, which would be, I mean, very loose, but we just trended so hard. It's very hard to kind of tell where you should put it. But yeah, maybe you have your stop's probably up here, just because the retrace from previous support treated as resistance is very possible. So, but if you're a little more anxious and want to keep your profit, your stop's probably above this green candle, right here. Maybe you're looking at the 1-hour guppy instead, and you have a stop like here inside your slow EMAs. So it just depends. But yeah, the trend's been extremely bearish. There is a trend line. See if I can find it. Here. And so this will be another thing to look at. Start here, boom. Yeah. So that's pretty much it. I think earlier in the video I told you where I would be trying to get short. But at the same time, I understand we could retrace to 6.8. I don't even have any advice for going long. I mean, I guess now, but it just doesn't make sense to go long. At least if you're just looking for confirmation swing trading. So you're being a little more aggressive, go for it. But that's all I have. So, please drop a like, share the video, drop it in some Discord, some Telegrams, on Twitter, whatever. And then also hit me up and let me know like what y'all actually want me to go over, and we can do that too. Because I really just freestyle these videos, and walk y'all through how I think. So that's it. Y'all take care.